Well, hi everybody. I trust you are all well and welcome to this week's live trade and profits show. All right, so what drama we are having in the world presently. But it's all good for us price action traders. We will just keep looking for the movements. The biggest thing to watch out for when we're in a war situation is that the market is now in just in a continual red news. You can look at what's happening at the euro presently. It's not a surprise, and I will tell you why just now. But the market is continually in a red news, so we have to trade cautiously. And the caution for me is really, if you hold in trades overnight, and if you hold in trades over the weekends, that kind of stuff, you really have to watch out for the gaps, because a lot can happen in between the time changes that is just kicked into the market as soon as the market's open. In any case, so let's have a look at what we have today. I have the euro up just to discuss, and let me tell you what I'm presently looking at. By now, guys, you know the setups that we put on our charts. Low of yesterday, high of yesterday, midpoint. And by having a look at what's taking place now, we can start to look for opportunities. Now, I've been looking at the market since earlier on. And right from the open of the day, the market has been in a trading range, which makes it pretty difficult to execute trades, because in a trading range, you want to be selling high at the top of a trading range, and you want to be buying low. You're buying low, either you're buying out of any trades that you've sold at the top here, you buy back your shorts at the bottom, or you're initiating longs hoping to get to the top. Not much price action ranging for us to take trades here. You don't want to be selling here only to take profits there. Unless you are super fast and you trade in an algorithm, just taking small fractions out of the market, it's just best to wait. As the market progressed, and I was trying to find where would you actually jump into the market. Remember, trading range, we're buying low and we're looking to sell high. So down here, the market is in a buy zone. And this double bottom was reasonably neat for us to look at, but we don't trade off the setup of the double bottom. Once we see a double bottom, we wait for a higher low. We didn't get the higher low. Instead, the market broke beneath the double bottom. Fantastic. When you get a breakout of any sort, you want to see the strength of the breakout. So there is a candle that's breaking out beneath that double bottom. When you get a breakout candle like that, happiness, you want to see the follow through to see if it's a trend bar. It was not a trend bar, so you kind of stuck, and the market is giving you information that the case for the bears is the market is going down. It's not strong, because if the bears were strong, breaking beneath an earlier trading range right here, it should have given us a follow through candle. Then we started looking for pullbacks. Didn't happen. Double bottom created by the bulls. Bulls themselves were not strong. Okay, so problem here, breakout, then followed by a doji instead of a full trend candle. So again, enough signs for you to kind of hang back for more information. And the next resistance level that you got to look at, or that's coming up in view, is the low of yesterday. And at the low of yesterday, what are we looking for? If the bulls are strong, if the bears are strong, they have to break beneath the low of yesterday. I mean, that's barely a breakout. It's just a couple of pips below the low of yesterday. So we want to see a strong breakout, we want to see follow through, and then look for pullbacks. We don't get it. We get a failed breakout, and we get back into this whole trading range indecision. So when you see this, you kind of say, well, There's no clarity. I just have to wait. I need to wait to see decisive price action. So when you have a failed breakout, it is telling you that the bears are failing to capitalize on strength. But you would have seen that here already. Breakout beneath the double bottom, no follow through. You'd have seen that here as well. Okay, so 3 attempts, 1, 2, 3 by the bears. And realize, the bear case is weak. So at that point, you must be expecting the first thing that you expect, or the first thing that I expect is not bull market. The first thing that I expect is more trading range price action. Okay, if I'm expecting trading range price action, then I'm looking to buy low and sell high. So when I set this up, I mean, this is just happened as we started speaking. When I set this up much earlier on, I was saying, okay, fantastic. Trading range price action, I want to see if I get a double bottom in this area. And if I do that, then I know I've had the 3 pushes, which are showing me failed breakout by the bears, first push, second push, third push. Then I just need to look for a higher low and see if I can get a trading range trade, buying low. But a trading range trade, if you buy in low, it's actually a reversal trade, which I love. I really love to jump into. But we didn't get that. Instead, we had this huge bear candle selling, breaking beneath that low. Then I'm looking for follow through, decent enough. That's minimum follow through that the bears can give you. Continued follow through, excellent. Then you get a doji. Now, with that happening, you're going to say, okay, let's see if we're going to get a pullback. Are the bears now asserting themselves in the market to give us an opportunity to jump in? And when you're looking for a pullback, you're looking for a pullback to the moving average. Instead, we get this surprise candle here. Okay. So that surprise candle, whenever you get a surprise candle, just big warning signs, just wait for more price action. And what is more price action? At least you got to see patterns forming before you. At the very least, you need to wait on the 5-minute time frame for 6 candles to form. So we are waiting. Something else that you can just see, but we can plug it in. Okay, so first push, second push, again, break beneath that. So all that was kind of showing us that, the bears have some strength in the market. Immediately the candles decreased inside, but still trend candles try to reverse, close near its low. Fantastic. Then we have this pause. And the pause before a pullback is just a bit of a question mark for me. I'm happy with it. If you get a pause, a doji, and it goes sideways, which becomes a tight trading range to a moving average, because now I look for micro double tops within that. But that, again, is a big flag. So let us wait on the euro. Just want to go up to the daily time frame. Okay, so as far as the daily is concerned, remember red line low of yesterday, green high of yesterday. This, if you are in the market as a bull, you're seeing this as a buy zone everywhere down here. Okay, the market came down, bulls bought it, gap down, bulls bought it. So if you're a bull, you're thinking, oh, okay, happy for the bears, show some strength, but we are in a buy zone. So if you're a bull on this time frame, you are looking just to jump into the market. Excuse that, sorry about that. All right, so bullish bull market in terms of being at a level of support as far as the bulls are concerned. The bears really have to demonstrate strength. So when you go down to our 5-minute time frame, at this stage, let's be very open with what we're looking for. Right now, who is in control of the market? The price is descending, the market is falling, but there is no decisive strength by any one side. What will convince me that there's decisive strength by the bears, if we start to bounce off this level of resistance, level of support, we've broken through now resistance, If we start to bounce off that and give me a trading range or a double top in that zone, then we can look at that. So that's one possible area we should be looking at. The alternative is if the bears continue to break beneath here, we're not going to jump in. We're going to wait to see successive bear candles and a pullback. There's still sufficient time for everything to form itself quite nicely so we can jump into the market. This is the euro versus the dollar, Zachary. This is euro versus the dollar. So if you just look down here, that's euro versus the dollar that we're looking at. So let's wait and have a look what comes up. If we get a double bottom in this area, okay, so this is one low. If the market comes back and bounces off here, good. Then we need to see a higher low, okay, after the double bottom, which will allow us to look for trades back into the trading range to test these areas or these areas up here. If we get a double bottom, and then after that, instead of a higher low, we have a break beneath the double bottom. It means we now have three pushes: first push, second push, third push, which is fantastic for us. If the market turns off that third push, we just look for a higher low. In any of these scenarios, if we get successive strong bear candles and a pullback to the 10 EMA, indicator of strength, and a failure at the 10 EMA, then we trade. So we patiently wait. Have a look at the next chart here. Gold. Okay, market is formed. Okay, so there is a first, there's a double bottom, high-low double bottom. Okay, so we can see that. And off that high-low double bottom, there is another bottom being created here. So this is good for a bullish market, okay? But when I say bullish market, look at the price action. Two-sided price action, two-sided price action. So bullish market, the initial stages of it out of a trading range is a bull leg in a trading range, okay? So if we get a decent enough setup, we will be good looking to buy, and we buy in to see if we can take profits up here. But we always jump in when you see a trade like this, hoping for acceleration, okay, and break above that high. If we don't get it there, if you haven't set your take profit, then we exit. Now, question is, why would we not have jumped into that trade? Because we have an outside candle. An outside candle is trading range price action. If we see trading range price action, we want to wait for the price to come back to the low and give us an entry. So this is one that you can just put on your chart in terms of looking for long positions. Initial goal, bull leg in a trading range. Okay, if we get a decent enough setup, bull leg in a trading range. Look to take profits up there. If we get acceleration, then we can just trail our stop up. If you don't want to do that, then you just set to take your profits somewhere in the upper third of a trading range. Okay, so this would be your ultimate goal. And you'll be looking to take profit somewhere within there. So decent enough. The other side of the equation, of course, if the market starts to collapse, what do we look for? Breakout candle, strong trend candle, followed by another one. A breakout candle doesn't have to be a large candle. It's a full trend candle. In other words, full body closing on or near its low. Then we want to see follow through. We see that we are happy. Then we wait for the pullback. Then we can execute the trade. Okay, so looking at Hang Seng 50, just while we're talking about that, really super excited about something that we are launching next week. So the second Wednesday of every month, we are launching a new product that's simply called Wednesdays at the Market with George. Okay, so that's the second Wednesday of every month. It's going to be open. It will be via Zoom, so you need to register for Zoom to get the Zoom links, and all the sales, the material, the links will come from the office. So the guys will release that to you sometime during the week. But I'm going to be trading Wednesdays. So it's Wednesdays at the market. There's 4 sessions that I will be trading of 2 hours each. One of them would suit the guys that are in the Asian time zone. So we'll be kicking off live trading, 1:15 GMT to 3:15 GMT. And that coincides with the open of the Hong Kong Stock Exchange. So we'll look at the open of all the markets, but primarily we'll be trading the Hang Seng 50. So very excited about that. So that's a 2-hour session, which will be next Wednesday. So the second Wednesday of every month will be open, and you can just subscribe to Zoom and participate. Then there's a second, so there's 4 sessions. The second session will be just from, it will end 30 minutes before this session. So it will be a 2-hour session, which will be from GMT 7 a.m. to 9 a.m., which my time zone, South African time zone, 9 a.m. to 11 a.m., will be trading that European London Stock Exchange open. So live trading, a little bit different to what we're doing here. Here we got 45 minutes. So then we actually executing trades, and we're in a trading room, and trading room rules apply. Then the third session will be covering that overlap time when there's huge liquidity in the market, which will be targeting the open of the US markets. So that will be 1:30 p.m. GMT to 3:30 p.m. GMT. Central African time, which is South African time, to 3:30 p.m. to 5:30 p.m. And there we'll be trading all the markets, but focusing on the US 500 as the market opens, seeing what's happening, and also the closing patterns of the European London markets. Then the end of the day is super exciting for me, because that's going to be 7 p.m. GMT to 9 p.m. GMT, 9 a.m. to 11 p.m. my time. The focus will be on the close of the markets, of course, but also on money management. If we've taken trades, how have we managed the money and the equity so we optimize our returns? So 4 sessions, I don't really have to memorize them. The material will come out, but that's the second Wednesday of every month going forward. That will be open. You just subscribe to Zoom. I will, of course, be open trading the same times, 3rd and 4th Wednesdays, but that's for guys who subscribe to some of the programs that the office will tell you about. So a bit of marketing and promo there before I forget. Okay, so we are on the 5-minute time frame. That's what we are trading. And I've just said a little bit about Wednesdays live at the market with George, inviting you to my trading room every second Wednesday of the month, publicly open, but on Zoom. All right, so now we are on the Hang Seng 50, okay, Hong Kong 50, 5-minute time frame. Let's have a look at this. Again, have a look, the low of yesterday, okay? So I was having a look at that and saying, well, if the bears are strong, they want to give me a close beneath the low. This is a perfect breakout close beneath the low. I mean, this as good as these trend breakout candles come. Okay, small tail at the top, very small tail at the bottom, full body closing on its low. Then I'm just waiting for a second follow-through candle. Instead, I get a doji. Immediately alarm bells go off to say, okay, hang on a second, don't rush into jumping into any shorts. There is something wrong with the case for the bears. The bears were strong. Okay, after these 3 candles, just give us a follow-through candle to confirm the breakout. Once we get that, then we start to look for pullbacks to execute. So immediately I see that, my mind says to me, based on all the patterns that I've seen, problem with the case. So let's hang and wait, because this is a 2-sided market. Now, here's something else that I want to show you. If you go to the open of the day. Now, the Hang Seng 50 is the one that we're going to be actively trading from its open because it is clearly defined sessions. Okay, so it opens 3:15 my time, 1:15, so it's a defined open. And then, we're trading all the way through to 6 a.m. my time, which is 4 a.m. GMT. Then there is the market closes for an hour. It opens again an hour later. And then we trade for 3.5 hours. Then it closes for 45 minutes and it opens again. So it's just opened just before we open the session. So those are really exciting for price action trading because there are certain patterns that we look for at the open. So if I go to the open here, the very first candle gives you so much information, okay? So you look at the first candle and you get a doji immediately. So if you're making notes, if you can remember it, that doji candle you cannot forget. That is indicating possible trading range price action. So what you do, and you guys been around quite a bit, you are used to this now. High of the trading range, low of the trading range. If we get a breakout above it, possible measured move. Okay, so when you see that and you say, okay, if I get a breakout above the trading range, absolutely fantastic. That's the goal. And that goal is absolutely perfect. If we were to get there before all of this has happened, we get into a 50% pullback of yesterday's range, low of yesterday, high of yesterday, 50% pullback, level of resistance. There's also a level of resistance from the measured move. So all you need is a perfect reversal candle to execute. But lo and behold, the market gives you a doji. So when you see that, even though now you look back, you say, oh, the market tripled down, you don't want to jump into that trade. Because if you do this over 100 trades, you will lose money. You want to wait for a decent reversal candle. If we've been given that reversal candle, something like that, it's small, but that's a different, decent enough. If this candle had closed on or near its low, then if you're in the market, you jump into that, put your stop above that. And the goal is to see if you can get to the low of that trading range, okay, that has created the measured move. And if you're to get there, then you take your profits. But we didn't get the setup. So if this had been next week and we are trading, I would have been speaking. That's the beauty of trading the open and having enough time to trade. We will be talking through each particular candle, what it means, what you need to look for. And when something sets up, we decide where to put our stop, we execute the trade. And from the moment we execute the trade, trader's equation has kicked in. 3 parts to the trader's equation: risk, reward, probability. So we would have managed our risk, decided where we put our stop, always in a technical position. So if you were to put a stop, if let's say this had turned out to be a distant reversal candle, 2 places to put your stop, you can put it above there. And when I'm trading the Hang Seng 50, I just add $10 to the price, and I put my stop above that. That's a reasonable place to put your stop. Alternatively, if you want to be conservative, and again, if this had been a perfect reversal candle, you could say to yourself, okay, if the market breaks above that, it might want to get to a measured move. So I'd rather be cautious because I'm going to go away. I put my stop above the measured move. You can do that and just hold your trade. So that's where you put your stop. Stop always is in a technical position if you trade in price action, right? Okay, so that was a problem for us. And then, continue trading range price action, nothing else set up for us to jump in because, okay, so that's the low of that opening candle, which ended up as a trading range. Why trading range? Almost equidistant tails on top and below. So trading range price action. The low of that trading range is here. So if in a trading range, the goal is to buy low. You want this product to be super cheap in a trading range. Buy low. And when it gets to the top, sell out of it, take your profits. When it gets to the top, you want to sell. Then you want to sell out at the top and take your profits at the bottom. You buy back your shorts. So as the markets are trickled down, you're getting back to the midpoint of the trading range, and you don't take trades in the middle of the trading range, and you get into the bottom of the trading range. So, there's no way to be trading comfortably. You don't want to take trades in the middle of the trading range, and you're likely to get stopped out more often than not. So wait for the setup. Then we have the breakout, failed breakout beneath that low, big warning signals, failed breakout. So we're still getting trading range price action, which is perfectly fine for us. We want to wait to get clarity before we can trade. So the key low that we now need to watch is here. Okay, that's the key low we're going to watch. If we're going to execute any trades, if trading range price action carries on, we want to wait for the market to come back and test here and give us a decent reversal so we can see the double bottom. Then we wait for the higher low or a variation. If you get a lower low, you wait for another higher low. Okay. So let's say we get our trading range price action, we get down there. And if we get a higher low, the decent enough reversal trade, and it is still sideways price action, not continued successive consecutive bear candles breaking beneath this, because that changes the structure of the market, you can take that trade. If when the market gets down to here, if it doesn't give you a double bottom, it gives you a lower low, you just have to wait and redo the whole process again. Okay, lower low, wait for a higher low. So patience is the name of the game. Now, with everything that is taking place in the macro environment, and if you follow Jeff and Ash, at least I know they're very good at looking at the fundamentals. I think you'll get an understanding of what's happening in the macro environment. As far as we're concerned, as price action traders, the stuff that we are seeing on our charts is telling us everything. So the fact that there is a war that is taking place, that's got the whole world interested, okay, that has been baked into the prices that we're seeing on the charts. The key thing to bear in mind is those periods of silence when the markets are closed, when things are happening, so that when the markets open, immediately we get in gaps, which is factoring in whatever is taking place. So if you hold in trades, again, just be very careful as you hold trades from through sessions when the markets are closed. But have a look at this. Again, when you look at this market, if you forget about what's happening, if I just give you the chart and I say to you, I'm not going to tell you what the chart is, but tell me, I'm not going to tell you what the chart is. I'm not going to tell you when it took place. Can you tell me what is happening? Or you would have said, okay, George, just from what you've shown me, there's a level of support here. The market bounced here and created a higher low. And then the market bounced off this level of resistance, created a lower high. And then, the bears have pushed the market down. But hang on a second, when we get to this level down here, now this light blue line, try and ignore it because I use that to mark the 50% pullback of yesterday's range, low of yesterday, high of yesterday. So that's all that blue line is. The 50% of yesterday just happens to be same level as this. But you'd be saying there's a level of resistance somewhere within here. The bears tried to break beneath that, and they failed to put a close beneath that level of resistance. So immediately, warning signals. If you are a bear, if you are a bull, you're saying fantastic level of support. Then next day we have an inside candle. So the bulls are happy, but if the bulls are strong, after an inside candle, we want to see an attempt to break out of that. Another inside candle would have been perfect breakout mode, inside. But we didn't get that. Get an inside candle, which is breakout mode in any case. And when you get an inside candle, breakout mode, we know that most breakouts fail unless whoever's creating the breakout has follow through. So again, you're telling me what's happening with the chart. You kind of say, okay, the bears tried to break out at some point beneath that, they failed. Okay, failed breakout, not a surprise. Inside candle, most breakouts fail, but there's a micro double bottom, which is market bouncing off the same level of price, just a candle in between. So showing strength. The next day we have a bear candle. Okay, the bulls tried to break out above that and say, no, the bulls were saying, okay, this is a low test, we can move the market up, but they failed, end up as a bear candle. But if the bears were strong yesterday, they should have given us the low, a close beneath this level. So that is giving you plenty of information before you come to today's trading, or as you come to today's trading. You can't ignore everything that is gone through to the left. It's like crossing the road, look left, look right, look left. So that is not a surprise for us. So when you start to see a failed breakout, we are not surprised, because we've been failing to break through this level. It could have been bananas or I don't know, whatever, candlesticks. It could be trading candlesticks, wax. It could be that, to still be the same thing. So your bias when you see that is, hang on, if the bulls reassert themselves at this level and give me an entry, I'm going to look to get it, okay? Because the bears have not shown any strength at this particular level of support. Okay. So let's keep that in mind. And when you're having a look at the price action, that is confirming that. So what it means is you got to wait for the price to get here. Now, how long is going to get here? It could be one candle, it could be two candles, who knows? But there's no particular rush. So if you got to go and do something, look at other charts, because if the market gets down to here, which is what we wanted to get, it has to create a double bottom for us. And once a double bottom is created, we want price separation between that particular double bottom and a higher low. I hope you can still hear my voice clearly. We got strange weather, and in summer, but these thunderstorms are coming out of nowhere. So one is just erupted, and I can almost have to raise my voice to hear myself. But hopefully you can hear me clearly. So we've got to wait to get down to here for a double bottom, and then wait to see what the market gives us. Higher low, if there's a lower low, we wait again for a higher low. So a perfect setup. It's nice and clean in terms of things are happening and unfolding quite gently. And you probably have realized by now, if you trade the 5-minute time frame, it is really super slow. If you're waiting for your strategies to set up, it is super slow. But when it does, it gives you the opportunities to jump in the market. So do not fear just because it says 5 minutes. UK 100, derivative of the FTSE 100, gap up, okay, as the market opened in the morning. Now, here's something about gaps. Most gaps tend to close. We just don't know whether they'll close today, the next day, or a couple of days later, but most gaps tend to close. Gaps are a huge magnetic force in the market. So in this case, no surprise that the market came back into the gap, okay? But again, trading range price action that's been created for us. Gap up, and the first candle is a high test candle. Would have been beautiful if it was a bear candle, but a bull candle, big question marks. So wait patiently. And now we still have the gap. So if we were to put the gap in there, you can do that if you want. I did that quite a lot in the earlier days just to train my brain, my neurons, how to view these things. So you can see we just get back into the gap and we are trading within this magnetic force. The market has to pull away from that and give us opportunities. And how does it pull away from that? It pulls away from that with a breakout. So we have a look at that and we say, okay, decent enough breakout candle. Problem with it is that it's an outside candle. An outside candle, if you write in your notes, is a trading range. And if you get a trading range, any breakout out of a trading range, most breakouts fail. And also, if you're breaking out at the bottom of a trading range, at the bottom of a trading range, we are looking to buy. That's our goal. Our goal is to buy at the bottom of a trading range. But so what follows? Another bear candle. Okay, bears trying to enforce the breakout beneath this candle. And if they're strong, they can then just exercise and show their force by breaking away from this with successive bear candles, but they fail immediately. Sideways price action, dodges, areas of agreement, are completely diffused in the bear strength. Again, dodgy candle. And when we see dodges, market tries to break out and fails, and we get back, right back into the area of the gap up in the morning. We're not going to do anything until the market breaks out above that. So 50% pullback. Yesterday's low, yesterday's high, big magnetic force pulls the market up. Bulls had a chance to break out above that. That would have been a decent enough candle. It's not an outside candle, so not a possible trading range. If the bulls had managed to break out above that, then all you want is follow through. Then you say, happy days, bulls are in control. Let's wait for the pullback to find a long. But bulls failed, created an inside candle, pause candle. Then a couple of candles later, bulls attempt to break out, follow through, failed. So already you're getting confirmation of trading range price action. Symmetrical breakout, try to break out beneath the low, try to break out above the low. So now we're waiting. What are we waiting for? Let's not do that. So this particular time, we are in a trading range. So this is good news for a bear case. Okay, double top. And all we need would be successive bear candles. So we've got one decent bear candle. It's closed beneath a lot of lows, closed beneath that. If we get a second bear candle, this candle, if it's a bear candle closing on or near its low, that's all we need. Then we know our double top is holding firm. Then all we need is the market to attempt to resume. And on the resumption, if it fails and we get a decent enough reversal, then we're looking to go short. We would have had also our 3 push pattern, which you always look for, is if it's there, it's confirmation. Market goes up once, goes up again here, fails, goes up again. So little separation. Remember, I always recommend that we look for separation. At least 6 candles. You got to see at least 6 candles separating your prices to know that something is going to hold. So market went up, came back, then a few candles up again. So this whole price action here to me is essentially one solid top. Okay, fantastic. So this top, that top, double top. We just want this particular candle. A couple of minutes to go, less than a minute to go. If it closes beneath its low, then we are happy. Our top is holding, just the pullback. Okay, if it gives us a dodgy, we're going to have to wait again. So if you have a look at what's happening on the daily, on the UK 100, no surprise, the big controlling factor is this candle here. The gap down and the market going up, then the inside candle and the outside candle. The absolute beauty about today. If today, the day, does not end up as another doji candle, if it ends up as an inside candle, but a bull candle, in other words, a low test candle, closing on or near its high, then tomorrow you're going to be looking for longs because you have an inside candle. This candle is inside that. We have an outside candle. This candle is outside that. And we have another inside candle. I mean, that is a superior breakout mode setup. But the key is going to be where today ends up. If today ends up as a high test candle, so tail on top and closing on or near its low, tomorrow you got to look up, and you got to, when you get up, you're going to be looking for shorts on this candle. So it's going to be very interesting to see where today ends up. Keep a look at it. For the purposes of time, let's just skip to daily time frame on the remaining of our charts. Okay, so my fib extensions will just see low of yesterday, high of yesterday. On this market, especially when the markets open in the afternoon, if the market continues to trade downwards and it's coming towards the low, I'm going to be looking for shorts on the US 500, Nikkei 225, okay, so again, on this market, let's have a quick look at this market. Very interesting. So here's why I popped it up, because I looked at it earlier on. Okay, earlier on, much earlier in the day, 4:40, that's 2:40 GMT, bears tried to break out, failed. Okay, a few hours later, again, bears tried to break out. So that's a breakout candle, but look at it, tails on top, tails below. So it should be giving you some alerts to say, hang on, why are they not closing on or near the low? But let's look for the follow through. They did the absolute minimum. Yeah, there was follow through, closing its low. So still fantastic. But we want to see just a bit more price action. Then we get dodgy price action, sideways price action, area of agreement. Why are we having area of agreement when I'm expecting some bear momentum? That's what I was looking for. So we didn't get that. We get a candle that's almost an outside candle. We have another dodgy candle. So all of this price action is neutralizing the strength of the bears that they were setting up at that particular time. So you kind of got to pause, look back and say, okay, let me wait and see what happens when we get back to area of support, now area of resistance. And the market just goes right through it. So we have a huge trading range that has been set up, but still very good news for market is always good news. So we're in a trading range. Something else is setting up that you must just keep an eye on. Okay, double top here. The market went up once again. If the market pulls back here and come back up here and gives us a third push in this area, we have a double top, we have a wedge top, and if we don't get the breakout by the bulls at this stage, from this wedge top, if we get a lower high, you need to be looking to take a trade to go back into the trading range. And if you're going to manage your trade, just manage it and see if you get a break beneath that low. If you want to take your profits, you've got to take your profits at the level of support. Okay, so that's one scenario. Third push, lower high. If on the third push we get bullish price action, there's still the 50% level of resistance that the market can bounce off and give us a lower high. So this is staying on my lookout in terms of shorts. So keep a lookout on that, guys, and let's see how it goes. All right, guys. So next Wednesdays at the market, look out for information from the office, 4 2-hour sessions, and you can join any of the opening sessions via Zoom and enter the trading room, and let's trade the markets live. Beautiful 8 hours. Come in whenever you can, and let's have some fun. All right, guys, take care. It's been great, and we will see you next week. Guys in the office, thank you very much.